Your morning cup of joe is about to get pricier as inflation hits coffee prices. Delta storms the nation. Who is responsible for vaccine hesitancy? Faith-based investing. Could the Lord hold the key for beating the S&P 500? Reverend Elon claims that he is a pumper, but not a dumper.
I might pump, but I don't dump.
All right. We start with the story of inflation. The Fed and other central banks around the world issued that tsunami of liquidity in response to the COVID-19 crisis. In doing so, they have overwhelmed the financial system, causing exuberance and irrational behavior in every corner of the economy, resulting in the mother of all bubbles when the equities, bonds, commodities, and housing markets are all in bubble territory. In addition to the irresponsible monetary policy out of central banks across the globe, we are also experiencing weird natural phenomenons. When combined with the tsunami of liquidity out of the Federal Reserve and other central banks, we are now witnessing the greatest inflation since the 1970s. And now inflation has reached your cup of joe. Your espresso, your lattes are all about to get a lot pricier as the climate crisis intensifies. We are getting news out of Brazil about a record drought causing a massive drop in the output of coffee beans, resulting in a massive shortage across the globe, which will lead to higher prices, significantly higher. And here are some of the headlines regarding the drought in Brazil impacting coffee crops. And as you can see, coffee plantations are turning up dry as wild weather ranging from frost in Brazil to an anticipation of the return of the phenomena of La Nina. And here is the article out of the Wall Street Journal. Coffee prices soar after bad harvests and insatiable demand. Global consumption set to exceed production this year as Brazil is hit with the worst drought-driven drop in output in almost 20 years. Global coffee prices are climbing and threatening to drive up costs at the breakfast table as the world's biggest coffee producer, Brazil, faces one of its worst drought in almost a century. Prices for Arabica coffee beans, the main variety produced in Brazil, hit their highest level since 2016 last month. New York traded Arabica futures have risen over 18% in the past 3 months to $1.51 a pound. London traded Robusta, a stronger tasting variety favored in instant coffee, has risen over 30% in the past 3 months to 1,749 a metric ton, a 2-year high. Brazil's farmers are girding for one of their biggest slumps in output in almost 20 years, after months of drought left plants to wither. Brazil's Arabica crop cycles between one stronger year followed by a weaker year. Following a record harvest in 2020, 2021 was set to be a weaker year, but the drop is more severe than expected. Brazil's total coffee harvest this year is expected to drop by the biggest year-over-year amount since 2003, according to the U.S. Department of Agriculture. Its Arabica crop is forecasted to be almost 15 million 132-pound bags smaller than in 2020. Others are guarding for even a larger slump. Dutch agricultural bank Rabobank expects the harvest to be 17 million bags smaller, while commodities brokerage ED&F Man, whose Volcafe arm is one of the world's largest coffee traders, expects a decline of more than 23 million bags. Wow. A drop that severe is unprecedented, said Kona Hake, head of research at ED&F Man. The pandemic shook up how consumers drink coffee. Demand for at-home machines and instant brews rose, compensating somewhat for closed coffee shops. The price rally comes just as Western nations are emerging from lockdowns and cafes are welcoming back customers starved of out-of-home coffee culture. Global coffee consumption is expected to exceed production this year for the first time since 2017, according to the USDA. The department expects 165 million bags of beans to be consumed in 2021. That is 1.8 million bags more than last year. Meanwhile, global coffee production is expected to decline to 164.8 million bags. So we are short a few bags here, and when demand surpasses supply, this is a recipe for inflation, a shortage causing inflation and higher prices. Add to that the speculation element from all of the liquidity out of the Federal Reserve. We have hedge funds and investment banks with a lot of cash and very few investment vehicles to chase. Equities are already bloated. Bonds are already bloated, leaving coffee futures as one of the few left opportunities to park all of that cash, which will lead to more speculation and more gambling in addition to the legitimate shortage out of the supply-demand dynamic. And this will be tailwind for coffee futures and coffee prices to rise significantly higher. Exports of Colombian coffee, particularly desired by baristas for its milder flavor, fell as anti-government protesters blocked highways and ports. So here we go. You have that tsunami of liquidity from the Federal Reserve causing inflation. And then you have these weird phenomena in the weather and weird fires in factories adding to the supply shortages. And now we have political unrest also causing shortages in supply. A shortage of shipping containers and rocketing freight costs hit Vietnamese farmers who produce more than a third of the world's supply of Robusta. The whole supply chain suffered not only a significant increase in costs, but also massive delays, said Carlos Mera, head of Agri-Commodities Market Research at Rabobank. Unlike other commodities which can be shipped on bulk carriers, coffee can only be moved around the globe in containers, he said. Investors are also playing a role, betting that commodities will benefit from rising prices generally. This is the gambling element, the speculations, the irrational exuberance fueled by the Fed's policy. Some investors bet up the price of coffee by putting money in commodity index funds that tracks broad baskets of commodities from industrial metals to coffee and cocoa, said Mr. Mera. And as you can see here, dry river banks next to dry coffee plantations in Brazil's biggest coffee-producing state, Minas Gerais. And now we're seeing the price of Arabica reaching multi-year high. And we are also seeing another phenomenon, the price arbitrage between Arabica and Robusta. Arabica trades at the New York Exchange. Robusta trades at the London Exchange. And when you have this price gap, it leads to hedge funds and speculators chasing the price higher, bidding the price higher, and seeking profits from arbitrage. And as you can see, the arbitrage between New York and London future markets is reaching multi-year highs. In addition, the hedge funds are now increasing their exposure to coffee futures, and we will see the same short squeezes and pumps that we have seen in other commodities. And this is setting the stage for perhaps one of the most explosive rallies in coffee futures in recent history. And this is from the International Coffee Organization. Daily prices for every variety of coffee are rising significantly higher. Whether we're talking about Robustas, Brazilian Naturals, Milds, Colombian Milds, all rising higher as we speak right now. And this is the classic recipe for inflation and higher prices. Brazilian coffee production is projected to be at about 35 million bags this quarter, well short of the projected demand. Matter of fact, the demand to supply gap for Arabica and Robusta is surpassing the gap from 2017 and 2015. And when we look at coffee producing countries, we know that the leader in world production for coffee is Brazil, followed by Vietnam and Indonesia. What's going on in these countries, by the way? Here is the headline from the New York Times. Brazil passes 500,000 coffee deaths, a tragedy with no sign of let-up. Here's another headline from CNN. Indonesia is now the epicenter of Asia's COVID-19 crisis. Indonesia is getting whacked by the new Delta variant. So we have two of the largest coffee-producing nations in the world suffering from a massive COVID-19 crisis, which will add more downward pressure on the supply. Meanwhile, the demand from Western nations will not let up anytime soon. This dynamic will make investing in coffee futures extremely attractive. At the same time, it will lead to a massive surge in the price of coffee. And I know what you're going to say. I'm English. I don't drink coffee. I drink tea. Well, guess what? Inflation is about to hit your tea too. There is no escape here. Even the prices of tea are about to surge higher. This is the mother of all bubbles. Due to a weird combination between irresponsible monetary policy, weather phenomenon, and weird occurrences of fires in factories, be it chip factories in Asia or car manufacturing factories in the United States, or even German factories impacted by the recent floods. This is the perfect storm for the greatest inflation since the 1970s. And perhaps, if the crisis continues to grow, we will face the greatest inflation crisis in at least a century. And look no further than the shortage of food and the implications that the shortage of food could have in the global arena. The last time food prices surged to this magnitude and we saw a significant shortage of supply, that led to the Arab Spring, leading to chaos and destruction across these nations. And we could see similar scenarios, not just in the Middle East, but also in other territories. Mind you, this is happening with a biblical drought here in the western United States. Matter of fact, the drought is so bad, it pushed the U.S. oat crop output to the lowest level in records going back to 1866. This is an unprecedented crisis in modern history. Matter of fact, the drought is so bad in the western United States, it is reaching alarming levels. National security alarming levels. We will look, for example, at Lake Oroville in California. You can see for yourself the contrast in water level in normal years and the current drought that the state is facing. Stunning pictures before and after. The drought has reached extreme levels, and these are before and after pictures from Lake Oroville. And you can see for yourself the state as a whole. In normal years, we see ice caps in the mountains. These ice caps melt, creating needed water for the state. Fast forward to this year, and the landscape is extremely dry. Nothing at all. This is a crisis unlike anything we have seen in recent memory. The central banks around the world, specifically the Federal Reserve of the United States of America, insists that inflation will be transitory. But when you combine the fact that the supply of money continues to grow, in addition to these weird phenomenons of climate change and reduced crops across the globe, shortages across the globe, increase in prices across the globe from shipping to raw materials to manufacturing to wages. This is the perfect storm for the greatest inflation crisis that we have ever seen in recent memory. Let's move on and talk about the Delta crisis and what's going on in this country regarding Delta. Delta is spreading across the nation. Cases are surging. Hospitalization and deaths also increasing, be it at a slower rate than before. Yet the rate of testing is actually falling down. While cases are growing, hospitalizations are growing, deaths are growing, but tests are not growing. So we don't even have a clear picture of how bad the Delta crisis is in the country. As the vaccinated are told that they are immune from the disease, they are at no risk, at minimal risk of exposure and transmitting. We're seeing people going out and about, mask mandates are lifted, and now you have no clue who is vaccinated and who is not vaccinated, and therefore the risk of exposure and infection is becoming increasingly alarming. And cases are growing across the nation, even though we have about 56% of all Americans receiving the coronavirus vaccine. And you can see from this map the percentage of total population that have received at least one dose. In the light green, slightly yellow color, these are the states that have the highest percentage of population vaccinated. Now, here's another map for new COVID cases in the United States. And I'm trying to find the correlation between vaccination and the new increase in cases. And so far, putting the two maps together, I cannot see a clear correlation. Of course, the Northeast, the West happen to be, the coastal areas happen to be the most vaccinated areas. And so far, looking at this map, we're not seeing a substantial or high risk of COVID cases in these states. However, we also have states with low vaccination records, but they're also not facing a severe Delta crisis. These states facing new COVID-19 cases, assuming primarily the Delta variant, are southern states like Florida, Louisiana, Missouri. All of these have been popular destinations for tourists, at least so far this summer. Likewise, we're seeing an increase in cases in Las Vegas. Las Vegas just reported one of the hottest seasons in history for the city. So perhaps the virus is spreading in certain areas, geographical areas, regardless of the vaccination records. In the next few days, we will start to see how the picture develops. The assumption is Delta cases will continue to spread. As these cases spread to highly vaccinated states in the coasts, will cases increase? Will hospitalization increase? And most importantly, will deaths increase? If that is the case, then we have a major problem from Delta. But if highly vaccinated states hold on, not producing a high surge of hospitalization or deaths, then perhaps Delta is not a problem, it is just a problem for the unvaccinated. So why aren't people getting vaccinated? I shared with you a survey among the unvaccinated. 50% of those said that they will never get the vaccine, but 50% of the unvaccinated say they're either waiting for more clarity before getting the vaccine, or they are hesitant because they're afraid of side effects from these vaccines. I'm sorry, but it's too late. Alabama doctor on treating unvaccinated dying COVID patients. As these patients suffer and die, the doctor says, I'm sorry, but it's too late to get the vaccine now. You should have taken the vaccine beforehand, before you got sick. But here's the problem. The public has a massive degree of mistrust for the government, the media, and these pharmaceutical companies. Of course, the government decided to follow the approach of politicizing the virus and the vaccines and leading people by fear using the media. This approach, in my opinion, is firing back, causing vaccine hesitancy. And a better approach would be transparency. Release the data, release the information, release the facts. Tell us what you know and what you don't know, and stop the politicization and the fear tactics because they're firing back. When the public has concerns regarding a specific vaccine, a specific company, public officials are better off addressing those concerns openly, using all the facts, rather than using propaganda. Because when the public do the research, we live in the age of information. The government is using tactics from the 1950s, Soviet era type of tactics in the information age, and this is not working at all. For example, a simple Google research would result in the following from the Seattle Times: rare breakthrough COVID cases are causing alarm and confusion. Breakthrough cases, this is the term for people who are already fully vaccinated, yet they're getting infected by the Delta variant. And this is causing a massive problem in the state. Breakthrough COVID cases prompts new calls to mask up in Washington states. And this is exactly what the market and the economy is afraid of. More rounds of restrictions and lockdowns to come. Here's more. The New York Times. A vaccinated aide to Pelosi tests positive after being in contact with Texas Democrats, some of whom also tested positive. The good news is that Madam Pelosi is not aware of this breakthrough infection within her staff because she's busy gambling in the options market. Matter of fact, have you guys caught her latest tweet? Amazon to the moon. Bought the September 4,000 calls. By the way, McConnell is short. Okay, and here are the weaseling tactics from the media. This is from Forbes magazine. Among fully vaccinated, breakthrough COVID-19 infections are more common than previously thought. Does it matter? Yes, it matters, you propagandists. Just tell us the truth. Is it a problem? Is it not a problem? What are my chances of surviving Delta having the vaccine versus what are my chances of survival having not taken the vaccine? Release the facts, release the data, and people will do the right thing. Stop the politicization, stop the propaganda. But here it is, more propaganda. Vaccinated people, your odds of COVID breakthrough infection have gone up. That doesn't mean you need to panic. They're using this tactic that if you are vaccinated, you're fine. You don't have to worry at all. You don't have to wear a mask. Go out and about. Is the goal to prevent more cases, or is the goal to win the moral high ground by proving that your stance on the vaccine was right? Very important thing to distinguish. And here we have Psaki, the new propaganda minister for the Biden administration. And of course, she is succeeding the previous propaganda minister, under the Trump administration Larry Kudlow, also known as Drunk Larry. And oh, I miss Drunk Larry, because Mr. Kudlow gave us an important market indicator back in the days of the Trump administration. Every time he goes out and brags about the economy, that marks a market top. You buy puts every time Larry Kudlow goes out and brags about the economy. It was a proven strategy, but now I miss those indicators. Every time Trump brags about the economy in Twitter, that marked a market top. Now we don't have these indicators from the Biden administration, but we have the same propaganda. It's just done on behalf of the blue team this time around. Psaki says that she refuses to give the number of breakthrough White House COVID cases, saying, "Why do you need that information? Why do we need that information? How about some transparency? How about you tell us, is it a problem? Is it not a problem? Share the facts, share the data. Stop it with the propaganda. We live in the age of information." And here are more examples from the media politicizing the issue. This is for NBC News. As GOP supporters die of COVID, the party remains split in its vaccination message. Again, they're turning this into Republican versus Democrat, shaming and scaring. I shared the data with you. The survey says 50% of the unvaccinated did not take the vaccine due to ideological issues or due to their political affiliation. They're not taking it because they're afraid. They're scared of side effects. They are concerned about the side effects of the vaccine. They have a high degree of mistrust of the government, the media, and these big pharma companies producing the vaccines. The constant flip-flopping from our public officials is increasingly alarming. For example, the CDC says if you're vaccinated, there is no problem. All of a sudden now, they are launching an investigation into the death of immunized patients in nursing homes. Once again, does it work or not? Which one works better than the other? What are the statistics? For example, Israel is releasing statistics. This country is not releasing any statistics. And here are your beloved big pharma companies. Johnson & Johnson's vaccine produced fewer antibodies against Delta compared with other shots in an experiment. Experts say we should not worry about the results. Who are the experts? What are their conflict of interest with Johnson & Johnson? We know that the FDA and the CDC are one of the most corrupt organizations in the country. Look no further than shoe polish Dr. Gottlieb, who was the commissioner of the CDC, and now he is a board member on Pfizer. It's a revolving door. We have no faith or trust in this corrupt system. And you wonder why people are not getting the vaccine, let alone the power of anecdotal evidence. You hear from people who got the Johnson & Johnson shot complaining about side effects. But rest assured, the CDC, Dr. Fauci, they say, oh yeah, there are side effects, but the benefits outweigh the risks. Okay, let's see if the public believes this garbage.
A new study released today is raising concerns about the Johnson & Johnson COVID vaccine's effectiveness against the highly contagious Delta variant. Good evening. I'm Steve Atkinson.
And I'm Kimberly Hunt. ABC 10 News reporter Rena Nakano looked at the study and spoke to a patient struggling with side effects after receiving the J&J shot.
One shot and you're done. That was the Johnson & Johnson COVID vaccine's allure. But one ABC 10 News viewer who wished to remain anonymous says she regrets getting the J&J shot.
I used to do cycling, yoga, Pilates, hiking, walking, and now I cannot do any of that.
Our viewer is a 50-year-old, otherwise healthy San Diego woman who suddenly experienced numbness and tingling in her left leg about a week after getting the J&J shot on April 7th. She also says her menstrual cycle suddenly stopped. Still in a lot of pain and no periods, she recently got an ultrasound to check for blood clots, but haven't got the results yet. Now, a new study that looked at blood samples for patients showed that the J&J vaccine was on average about 7 times weaker against the Delta variant than the original strain, compared to the double-dose Pfizer and Moderna. With this and her side effects combined, our viewer says she is upset she did not have a choice.
People should have the right to choose which one to take. And if you have an issue, the doctor should report that to the company.
We sit here and wait all night, hope people show up and get vaccinated.
Dr. Jerry Abraham is desperate for answers.
These are our Johnson & Johnsons. Just chilling, literally chilling. Nobody wants them.
A few months ago, the lines for vaccines were around the block here at Kedron Community Health. But tonight, even as the number of hospitalized patients in the state and in LA County has doubled in the last month, the clinic is open and empty.
How about being transparent, saying, you know what, the J&J vaccine, not so good. Pfizer or Moderna, here are the facts. The mRNA vaccines, they work, at least on temporary basis. But they do work. They prevent you from being sick or going to the hospital or even dying. But yes, perhaps the side effects of Johnson & Johnson's vaccine are too much and we need to cease using that one. Just like that, immediately, the public trust will elevate higher. And of course, Johnson & Johnson already cashed in, whether you have side effects or not. Johnson & Johnson projects $2.5 billion from vaccine sales globally. This is the same company, by the way, along with other drug companies who just spent $26 billion to settle claims from the opioid crisis. And we are heading to the new normal, vaccine passports. Perhaps this approach will work. Rather than sharing the facts and the data, what we know and what we don't know, vaccine certificates will become a requirement to enter nightclubs and other large indoor venues in England, starting in late September. And here's from Israel. They have green passes that you have to use for any large outdoor or indoor gathering. And now we have Italy introducing vaccine passports for indoor activities as infections spike. This will become the new normal. I don't know. You tell me. Do you think that this approach will work here in the United States? In my opinion, we have 50% of the unvaccinated people not refusing to take the vaccine, but they have hesitancy. They're scared. They're afraid of taking the shot. How about we be transparent, share the data, what we know, what we don't know, and you bet a large number of the 50% of the unvaccinated looking at the data, if it is indeed convincing, no propaganda, no manipulation, no politicization, they will indeed take the shot. We're moving on to market sentiment news. What is the most crowded trade in the market right now? Last month, it has been the inflationary trade of commodities. Long commodities was the most crowded trade. And we all know what happened to commodities, a very significant and sizable correction. What is the most crowded trade right now? Number one, long tech stocks. Number two, long ESG. And now we're seeing the resurgence of technology stocks, specifically the big cap technology stocks that have been dormant for months and months and months. The problem is these stocks moved significantly higher in a short amount of time. And now they're becoming the most crowded trade in the market. What do we have next week? Big cap technology names earnings. It will be perhaps one of the most important earnings seasons in recent history, when everybody has the consensus that technology stocks will outperform. They will beat earnings reports. Top and bottom lines. Put your blindfold on and buy technology stocks. Apple, Microsoft, Amazon, Facebook, Google, bidding these stocks higher ahead of getting earnings. They don't even know what the earnings report will produce, yet they're putting their blindfolds on and they're buying these stocks. This upcoming week, we could witness the biggest disappointment in big cap technology stocks investing. Mind you, all of these companies are under scrutiny from the regulatory side of the government, not just in the United States, but across the globe. But somehow investors believe that regardless of the valuations, these are the names that you should be buying right now. We will see. More in market sentiment. How our quote-unquote family offices are positioned right now. You know, family offices like Archegos Capital, which blew up a few months ago when Bill Wang, the founder of Archegos Capital, caught gambling on margin. And he got caught with his pants down, causing a massive crisis that was thankfully averted from becoming a wider crisis in the market. Mind you, the Archegos scandal blew up billions of dollars out of large financial institutions, the likes of Credit Suisse, Morgan Stanley. What will happen if more family offices blow up? This is the real black swan, ladies and gentlemen. Forget about Delta. The real black swan is these family offices. We have no clue what they're doing right now. They have no obligation at all of disclosing their investments, their decisions from the SEC. We're in the dark. We did not know anything about Archegos. We saw the rise of Viacom and Discovery stocks, and everybody blamed it on short squeezes and retail investors. Meanwhile, after the fact, we found out that Archegos Capital, led by Bill Wong, a professional gambler, was gambling on margin. Billions and billions and billions of dollars on margin. Made a mistake, and we saw multi-billion dollars blow up in the market. What will happen if multiple family offices get caught off guard, get margin called at the same time, and we see the Archegos disaster multiplying with multiple family offices blowing up at the same time? This is the real black swan. In the meantime, here are their positioning. They're increasing allocation to equities, they're reducing cash and fixed income allocation, and then they're investing in cash flowing operating businesses. And lastly, they're investing in stabilized real estate. So these family offices are in risk on mode because they're increasing their allocation in equities, even though we have one of the most bloated valuation metrics in the history of the stock market right now. And by the way, what a weird week of trading in the stock market. The Dow Industrial Average opened the week on Monday down to the tune of about 1,000 points, only to stage a comeback, and both the S&P 500, the Nasdaq, reversing all of the losses and closing in the green for the week, decisively in the green. One of the biggest rebounds in market history. Who was buying the dip? Here is your answer. A lot of very young people are the ones buying the dip. The moment we saw a dip, these amateur investors putting their blindfolds on and stampeding to buy the dip in stocks. Is it a wise decision? It could be, so long as we are in a hyper bubble mania market. But it teaches this generation of investors a very bad lesson. The markets only go up, and it is easy. You buy the dip every time, and you win until they get caught in one of those dips that continue to go down, catching a falling knife, and we see a sizable correction in the equities market. Normal markets don't work this way. This is the mother of all bubbles that you and I are in. The markets are behaving differently. This is not normal behavior. This is not different this time around. It will not be different. It will end the same way the financial crisis and the dot-com bubble bust ended. It will end the same way. In the meantime, some will buy the illusion that this time it is different. But rest assured, you got allies. If you are one of those very young people who bought the dip this week, you got allies in your side. Starting with fortune teller Tom Lee. And the headline says, stocks get crushed. But looking at Tom Lee, it looks like Tom Lee got crushed. Just relax, Tom. It's just one day. One down day. You don't have to panic. You don't have to come out and urge people to buy the dip. We all know what to do. And of course, when the reporter asked Tom Lee, which stocks should people buy the dip in? How about oil stocks? Yes, that one. What about technology stocks, Tom Lee? Yeah, that one too. How about financial stocks? That one too. Pretty much Tom Lee's strategy is, if you place your chips all over the roulette table, something gotta hit. You also have an ally in Morgan Stanley. Morgan Stanley says no need to lower GDP forecasts on Delta variant risks. Yeah, what is Delta? Is it here or is it over there? I don't see nothing. GDP is going to grow higher. These doctors at Morgan Stanley, they know how to deal with Delta. And by the way, what about the tulip market? Since we're talking about market sentiment. Well, the EU proposing a ban on anonymous crypto transactions as a part of a broader plan to combat money laundering and terrorism financing. But once again, the tulip community, the laser beam community, the cryptomaniacs, rest assured you have an ally. The Robin Hoodiots who are buying the dip, they got an ally in Tom Lee. The cryptomaniacs, they got a bigger ally. Elon Musk, Jack Dorsey, and Cathie Wood attempt to ride to Bitcoin's rescue. They made a major conference and they were pumping all day for hours and hours and hours. And yes, they managed to rescue Bitcoin because it is trading above 30,000 once again, but it only resulted in so far a 5 to 8% rally. It is now in the hands of investors to buy the dip in BTC and push it higher. And of course, Jack Dorsey, the CEO of Twitter and Square, says that he hopes Bitcoin can bring about world peace. And rumor has it that Jack Dorsey has been smoking a significant quantity of some good stuff. Hey Jack, you want to talk about world peace? Let's talk about the pollution out of the tulip. A single Bitcoin transaction has a carbon footprint of 1.8 million Visa transaction. Once again, a single Bitcoin transaction has the carbon footprint of 1.8 million Visa transaction. What about the electrical energy footprint from a single transaction of Bitcoin? It is an equivalent of an average US household use over 59 days. One Bitcoin transaction is the equivalent of 59 days worth of electrical use for the average US household. Tell me again that the tulip will bring out world peace. It will solve all of our problems. You just gotta bite the bullet for a little bit and let us pollute the planet for a little bit so we can get richer, huh? Stop it with the FUD. Stop it with this environmental concerns. We want to get rich. This is just another scam for them to get richer. It has nothing to do with Bitcoin, cryptos, central banks, the fiat currency, all of that garbage. All of this is motivated via greed, period, full stop. And now we have Reverend Elon Musk, the biggest pumper and dumper in history, now saying that Tesla might and will likely start accepting Bitcoin once again. If you hope and pray, and please stop getting mad at me. Yes, I've pumped and dumped, but I am a pumper, not a dumper.
I might pump, but I don't dump.
And let's talk about Tesla witch Mama Cathie Wood, the inventor of faith-based investing. You know, the Lord, He knows. If you pray, if you take a significant quantity of LSD, perhaps the Lord can speak to you and spit some tickers. And this is the thesis of Cathie Wood's style of investing.
And I realized I was going to be alone for 2 weeks. All alone for the first time ever in my house for 2 weeks. And I wasn't happy about it. I wasn't sad about it. But what happened is this. The Holy Spirit hit me over the head with a business idea.
They gave you what?
LSD.
Castration! Double castration!
And of course, faith-based investing is spreading worldwide and is becoming a global phenomena. Have you met the Indonesian celebrity preacher who's pushing meme stocks and moving Indonesia's stock market? You close your eyes, you take a significant quantity of a certain drug, and you praise the Lord, and you ask Him to spit some tickers for you. You have a dream, you buy call options ahead of time, and then you spit the ticker in your social media platforms, and boom, God was right. He spit the right ticker, and we all get rich together. Of course, until we find out that this is yet just another pump and dump scheme. And if you thought that faith-based investing is ridiculous, well, we have mushrooms-based investing. Remember the German investor who takes hallucinogenics and invests in cryptos? Ladies and gentlemen, tell me again that this is a rational market. We are not in a hypermania bubble. We are seeing some of the craziest phenomenons, not just in the United States market, but in the global market. Back in the dot-com bubble, we have seen this stuff before. Even back in the 80s, craziness across the board. Traders will snort coke and start trading, gambling, pumping, dumping all over the place. But the bubble and the mania was limited to the dot-com stocks and the NASDAQ. This mania is not limited to the NASDAQ. It is spreading across every class of financial assets. Equities, tech stocks, non-tech stocks, growth stocks, value stocks, even value stocks are in bubble territory. Bonds, commodities, real estate, imaginary stuff, NFTs, tulips, the mother of all bubbles. Tell me again, this will end well. Moving on to corporate-specific news. Let's start with Amazon. A few days ago, we talked about the richest man in the world and space asshole Jeff Bezos. He went to space, he had his joy ride, and then he goes down to Earth telling us that this was on behalf of humanity and yada, yada, yada. But it was just fun for him. And of course, now Jeff Bezos is bribing his way to silence any criticism and appearing to be philanthropic. I have a little surprise for you. Jeff Bezos announced $100 million for activist Van Johns and chef Jose Andres. Bezos then announced a new philanthropic initiative consisting of $100 million award that recipients can, quote-unquote, direct to the charities of their choice as they see fit. He added, no bureaucracy, no committees, they just do what they want. They can give it all to their own charity or they can share the wealth. It's up to them. In other words, this is my guilty money. Hey, Van Jones, here's $100 million. Make sure you shut up and you tell your friends to shut up and not criticize me anytime. This is like Tony Soprano reaching to his pocket and bribing people. More from the evil empire of Amazon. You know, we had this scandal of the Israeli spyware, Pegasus, spying on journalists and politicians, etc., etc. Well, now we have Amazon striking back. Amazon Web Services bans accounts linked with Pegasus spyware. Bezos wants to be the only spy left. He's the only one allowed to spy on you via Alexa. Oh, and by the way, speaking of Van Johns, what about CNN? CNN plans to launch streaming service next year, betting that loyal viewers and cord cutters will pay for extra programming from the cable news channel. So if you like your propaganda to go, you should be excited about this new streaming service. Of course, this is propaganda for Team Blue. Team Red has Fox News. Team Blue has CNN. What about JP Morgan? JP Morgan. JP Morgan is giving CEO, or beloved CEO, I have to say that, Jamie Dimon, a special stock option bonus to keep him as CEO for several more years. This guy is about to be the longest serving bankster in United States history. And of course, watch every time he's on CNBC, Fox Business, Bloomberg. They have a massive orgasm every time they interview this guy. Once they get an interview with Jamie Dimon, they keep replaying the interview over and over and over. Have you seen my interview with Jamie Dimon? Oh my God. Have you seen Jamie? Have you seen his tan? Oh my God, his tan, his hair. Oh my God. And Jamie is getting a nice package here, perhaps worth hundreds of millions, if not billions of dollars. And kids, this is how you make money in this country. Forget about the American dream and all of those fugazi promises. You work hard, you save your money, you follow the rules, you pay taxes, and you'll make it in this country. Bullshit. You want to make it big? Sit in your ass, create a racket, let the Fed flood the financial system with a tsunami of liquidity, print it out of thin air, fake money. You write yourself a few options, a few shares, all digital fake wealth floating in the air. And you have one global stock market mania pushing all of that fake wealth to explode in value. And then you sell and you turn the fake wealth into real wealth. And ta-da, you made it. You're a billionaire now. But working hard and saving money, doing the right thing, what are you, a loser? Speaking of losers, did you guys see Netflix's earnings this week? Absolutely horrible. This is an aging company. This is what they say. It's a maturing company. This is the disruptor who disrupted Blockbuster. But perhaps Blockbuster is laughing from the grave because Netflix is being disrupted right now. We have video game streaming services like Twitch and the likes. And now we have competitors like Disney Plus with a better business platform. They charge you a monthly subscription fee and then they charge you a pay-per-stream fee for their new releases. Brilliant. Absolutely brilliant by Disney. The business model of Netflix is becoming outdated indeed. We are spoiled right now, us customers, because we have a streaming war, and therefore we're seeing a tsunami of content at the tip of our fingers for a small monthly fee. But I got some bad news for you. Perhaps all of that will come to an end, because the business model of Netflix is becoming challenged. And instead of following the playbook of Disney Plus, of charging people a monthly membership, and then charging them a pay-per-stream fee for their new releases. For example, yes, we charge you $13-14 a month, whatever it is, and then you want to watch the Queen Gambit Season 2, well, that's an extra $25 per stream. You want to buy the whole season, you gotta pay us an extra $25. Netflix will have no choice but to do that. And it will be bad news for us consumers. We are spoiled right now. You and I don't realize it, but we are spoiled. But Netflix is trying another avenue here by offering video games. And of course, the market is not reacting positively to this new development. And we saw Netflix stock dropping down. It is the worst performing stock among the so-called FANG stocks. The best performer of last decade, and this is what happens, kids, when stocks grow out of whack, valuations don't make sense at all. At some point, all of these earnings and growth have been already accounted for, and the stock will either consolidate for years and years and years or go down. All of this mania of bidding stocks valuations higher ahead of time will at some point these companies will mature and stagnate, and either these stocks will park sideways, waiting for earnings to grow to the valuations, and that will be the best case scenario, or they will drop down and revert back to the mean. And speaking of holding bags and losing money, are you guys seeing what's going on with the Chinese stocks? What a shellacking. DD shares drop when report China is planning unprecedented penalties. They're punishing their own companies. What is the wisdom in that? And today we saw Chinese education names like TAL Education down over 60%. Is the plan to delist Chinese companies from American markets? And if that is the case, we will see billions of dollars worth of bags in the market. All of these people, investors, holding Chinese stocks, what will happen if all of these Chinese stocks are forced to delist from foreign markets? You think you're gonna sue Papa Xi and get your money back? Good luck. In other holding the bag news, what about this one? For Marky Mark. Yes, Marky Mark is also exploding the mania. F45 Training, a provider of group fitness classes backed by actor Mark Wahlberg, rose as much as 11% and then fell near the offer price in its $325 million IPO. And rumor has it, Marky Mark took a massive dump that day. The good news is, if you end up holding the bag in this one, at least you're gonna grow some biceps. You see how smart we are? There is a silver lining after all. And perhaps Marky Mark will be generous enough to offer you his autograph as an NFT.
You know what? I'm the biggest star here, man. That's the way it is. I want to It's my big dick, so everybody get ready now.
Lastly, in bag holding news, you know the AMC so-called apes? Well, they're holding the bag in AMC stock, holding hands and praying for the Lord to force shorts to cover. But the shorties are not covering, and therefore the stock continues to go down and down and down. The good news is that AMC apes are holding the bag, and the bag is full of popcorn, courtesy of AMC CEO Adam Aron. But watch out here, AMC apes, because a lot of you will be seduced by this one. Dole Bananas is about to list in the stock market. The food company is selling 26 million shares at $20 to $23 each. It will trade on the New York Stock Exchange under the ticker DOLE. The good news is, apes, if you migrate to this one, if you end up holding the bag, at least you'll end up holding a bag full of bananas. And when it comes to the battle between bananas and popcorn, take the banana, leave the popcorn. Ladies and gentlemen, thank you for watching. Thank you for listening. That's all I got for you tonight. Have a great weekend and good night.